Hey, boss, I got one for you.
Go for it.
All right,
Let's hear
fuck,
it.
Mary, kill. Jay Powell, Yellen, or Ken Griffin?
All right,
Suicide.
say say it one more time.
Kill myself.
Say it one more time.
Fuck, Mary, kill. Jay Powell, Janet Yellow, Ken Griffin.
All right, theoretically, because this is just a game, kill Ken Griffin. I don't condone violence.
Allegedly.
Shit. Fuck Jay Powell and marry Janet Yellen.
I think that's the best answer.
Nope. I know the best answer.
Could you imagine going at Jay Powell? I mean, and at fucking Janet Yellen? I don't want to think about either one of them. That's fucking disgusting. But let's put it quite simply. Janet Yellen would just be like rubbing your dick through sandpaper, so I want nothing to do with that.
Janet Yellen's the only one who wouldn't demand a prenup.
So you could probably shoot him in the head, her in the private parts, all in one bullet.
Well, I mean, if you got a good enough shot, why not? Cheers, everybody. Fuck. Cheers to that.
Cheers.
That's definitely a grudge fuck.
What a wonderfully disgusting way to start the fucking stream. Welcome to Boss Blunt's Think Tank. I'm Marcel, the Butcher of Wall Street, a.k.a. Boss Blunts. Thanks for joining us today.
It's Wednesday. We're shooting the shit.
We have some incredibly fun things going on here. Banks are going fucking broke left and right. The RRP's at record highs every single day. Cost to borrow on meme stocks and even precious metals are starting to skyrocket. All sorts of crazy fuckeries happening. Grandpa Barney wants sloppy seconds on Jay Powell, so cheers, brother. On that note, yeah, it's been a fun one. We've been literally talking shit about Jerome Powell and Janet Yellen and Danny DeVito for like the last hour here. Danny DeVito is, by the way, much more attractive than Janet Yellen, I gotta say.
Yeah, he is.
I mean, you can't forget Skin Suit Pelosi either.
Oh gosh, don't even get me started on insider trader Pelosi. That woman doesn't know how to call it quits.
It's kind of hot though.
If you put a paper bag in it, maybe, and
I know y'all saw Pelosi in that bathing suit.
No, if you put a paper bag on your own head, she's all right.
Yeah, but you gotta watch out for her subsidiaries. Eyebrows LLC, though. I mean, you gotta watch out for that.
Oh, you guys are in the varicose veins. Okay, I see what's going on here.
Eyebrows LLC, their stock just goes up and 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 never stops.
Great name.
Welcome to the Matrix, the financial matrix. That's why that is our background, because the stock market had a massive pump. The SPY is going to end the day over 400. The SPY, to 40,009 or so right now on the SPX, which is absolute hilarity. The Federal Reserve has lost all credibility, you guys. Nobody takes anything they have to say seriously in any way. Powell thinks he's talking tough on inflation, and the NASDAQ's up 4%. The SPY's up nearly 3%. The market is mocking him. He's a fucking joke. He wants to be Volcker, and he's the complete opposite. Whatever credibility the Fed had left is completely fucking gone.
Gone.
Powell said
so
household
all that
surveys.
And what'd he do? Just take a shit, and all of a sudden the SPY went up the hill?
Basically, absolutely right. And you know what? Our number one favorite, Zoltan Posar, says in a note that the Fed has one big problem: inflation. And he continues to explain that the market could actually use a little uncertainty in in the behavior of the Federal Reserve to help quell this said inflation. Legendary central bankers like Paul Volcker sparked volatility by starting to target quantities instead of rates. And he didn't talk too much about what he was doing. He kept the market guessing. The yield curves went flat and have now inverted in ridiculous fashion. The 2 years making the 30-year look like a 2-bit whore. Okay, this is really bad. Zoltan continues to say, we need a Volcker moment in which where vol stands for volatility. In other words, Posar writes that the Fed needs to crash the markets to contain stocks. This is the exact same thing that we've been telling you here on the Think Tank since July of 2021, when we first noticed that inflation was out of control. American personal spending is in the gutter because American personal savings is almost non-existent. Meanwhile, American credit card debt is at all-time record high levels. In addition, housing costs are out of control. We've finally seen a contraction of the housing market prices for the last 4 months, and we saw a 9% reduction in the month-over-month housing prices here in the United States. 9%. And things are just getting started, ladies and gentlemen. Just getting started. We got a lot more rate hikes to go before we get to where we need to be. And we're never going to get there if Jay Powell continues to open his fat fucking mouth and tell everybody exactly what he plans to do. Zoltan's volatility conclusion is not obvious, but his path to the concept is. Here's an attempt to understand that he came to that conclusion. By volatility, we take him to imply the Fed needs to stop telegraphing its moves, keep the market guessing, and encouraging self-clearing behavior. It's the same thing I had just got done telling you guys. I didn't even read this article. I pulled it up because I knew exactly what it was going to say already. 2 ways to kill inflation. There are 2 ways to slow inflation: by hiking short-term interest rates or forcing long-term interest rates higher. The first is where the Fed hikes short-term rates, thereby slowing economic activity, as previously discussed. And since Volcker, the Fed has sought to actually keep long-term rates lower by raising short-term rates. In doing this, they slow the velocity of money, make loaning more unprofitable, and thus eventually reduce the demand for dollars. The second way to lower inflation, Poser says, Zoltan tells us, by forcing long-term interest rates higher. The idea behind that, it is more expensive that the more expensive it is to borrow, the less money will be borrowed. And then you can see that in the housing market right now, ladies and gentlemen. That's why housing this month is down 9%, 9.8% month over month. The spread between real rates and nominal rates at the long end must be closed. We're going to see a continued destruction of the middle class, of real estate markets, and everything in between, bonds and the DXY eventually, as well as the stock market. The idea was to hike short term and watch long term. But as we know, Jerome Powell is a complete joke. He's no Paul Volcker. I could do his job better than he fucking can. That man's an attorney. He doesn't know dick about the economy. The preferred method for stopping inflation is by raising short-term rates. Over the past 30 years, that worked well for the most part, in line with the Fed's dual mandate of price stability and high employment, aka Ponzi scheme of printing money. By raising short-term rates, they were willing to stomach causing recessions while slowing inflation. That was because major secular trades were blowing their way. Back-end rates have to go up to fall sometimes. Capitulation and ability to lower short-term rates is going to take rising inflation fears, raising rates to slow, flattening the curve, which we're currently seeing right now in stagflation, which means a stagnation of our economy, and inflation continues onwards. Stagflation. The money stops flowing. And it's inverted, meaning that investment stops in all but long bonds, recession imminent, inflation stopped. That inflation has not been stopped. People have not gone into long bonds only, and that's why the 30-year yield is lower than the fucking 2-year yield. Would you put your money into a bank for 30 years to lose a ton of it to inflation? Inflation's at 9.8% and you're getting a 2.9% on your 30-year. Or would you be safer going into a 2-year that's going to be paying you around 3.01 or 3.02%? In addition, why wouldn't you just go into overnight repo? The Federal Reserve overnight repo is absolutely massive. And the reason that it is because it makes more sense financially for these banks to hold on to their liquidity in an overnight repo. The current offering was 1.55%, meaning that $2,188,994,000,000 was accepted in the overnight repo by 102 financial liquidity counterparties. They exchanged cash for U.S. Treasuries at an offering rate of 1.55. But ladies, that's not all, ladies and gentlemen. Now, the Federal Reserve just raised rates another 75 basis points. That means that this 1.55 is going to increase to 2.3, because if they got to add the 75 basis points to that and keep this 0.05% above. So now, while the Federal Reserve claims to be reducing quantitative easing, which is the printing of money, and they state again that they're falsely that they're tapering more than they're easing, in addition to that, to the buying of mortgage-backed securities and the buying of United States Treasuries, the Federal Reserve is bailing out these banks by $2,188,994,000,000 every motherfucking day. Every single day. Think about that. That's $100 million fucking dollars nearly in interest that the Federal Reserve and money that the Federal Reserve is printing out of thin air with ones and zeros to give to these fucking banks. And why is this a big fucking deal? Well, ladies and gentlemen, because Credit Suisse has reported $1.65 billion in losses for the second quarter as European rivals see gains. These fucks are so over-leveraged. Their swaps are so abusive. The derivatives are so toxic that this is the third quarter in a row that Credit Suisse reports a $1.65 billion loss or so. Third quarter in a row of heavy multi-billion dollar losses. And this is nothing compared to what I'm about to tell you here shortly. They slumped to a loss on the second quarter, they said on Wednesday. They announced a change to leadership and a shift to scale back the tarnished investment bank. They lost 1.65 billion and compared with a profit of 253 million Swiss francs a year earlier. They're talking about a year ago because they've been losing for the last 3 quarters in a row. So they had to go back 4 quarters to bring up a profitable quarter. What a fucking joke. The bank's weak performance for 3 months that ended in June stood in contrast to more upbeat reports from European rivals Deutsche and UBS. Credit Suisse are the same guys that allowed Archegos Capital to produce billions and hundreds of billions of dollars in swaps in misreported and unreported and falsified swap information. But because it's all self-reported, Credit Suisse just took them at their word for it because they are well aware of what's going on, and they were just greedy, looking to make money off of it. They posted a net loss of $1.2 billion in the second quarter, on top of this one that's just finishing right now, driven by slower issuance of bonds and loans for companies in decline in trading revenue. BlackRock, ladies and gentlemen, BlackRock, the world's largest asset manager, lost $1.7 trillion. We're not even talking about $1 billion like we were just a moment ago from Credit Suisse. Yeah, they lost $1.65 billion this quarter and $1.2 billion the last, and they lost another billion and some odd before that. But in the last 6 months, BlackRock is down $1.7 trillion. They had $10 trillion under management, and their assets under management have fallen by 11% in 2022. Now they're only managing $8.49 trillion. But think about this. A trillion is a massive number that most people can't conceptualize. Let's conceptualize it for a minute. Okay, in seconds, time. Okay, you know how long 1 second is? Count to 10 seconds, right? There are 1 million seconds in about 12 years. 1 million seconds is about 12 years. 1 billion seconds is about 32 years. That's the difference between 1 million. 12 days. Let me start over. 1 million. I'm off the top of my head here, so I did make a mistake. 1 million seconds is 12 days. 1 billion seconds is 32 years. 1 trillion with a T, 1 trillion seconds is 31,460 years. Million is 12 days. A billion seconds is 32 years. And a trillion seconds is 31,500 years. Think about just how massive that is. And these guys lost $1.7 trillion just in the last 6 months. Larry Fink explained that the 2022 ranks as the worst start in 50 years for stocks and bonds. And as a result, investors withdrew $10 billion from BlackRock. And retail investors withdrawing $10 billion did not cause a $1.7 trillion loss, obviously.
That's like Apple disappearing in 6 months.
Apple's gains just wiped out, huh?
Like totally gone.
Coinbase has just been announced, just yesterday or the day before, that it is being investigated by the Securities Exchange Commission for fraudulent activity, allegedly. BlackRock has heavy exposure to companies like Coinbase, Riot Blockchain, and Galaxy Digital. This means, in my non-financial advisor opinion, further losses to come in the short-term future and long-term. BNP Paribas, though, another major crook in the financial industry, is going to be launching crypto custody with $13 trillion under management. Absolute disgusting. Losses on losses. The Fed was comfortable risking a recession while fighting inflation because supply chain and production improvements kept the price of goods in a disinflationary trend. But this is not true, as we know that the price of goods still continued upwards. Zoltan said, goods prices were a steady source of disinflation over the past 2 decades, which gave the Fed precious time and cover to figure out what to do with policy rates to control services inflation. He says, not this time. The Fed's dual mandate has been modified. Secondly, the tailwind of goods disinflation enjoyed by Fed's policymakers is no longer there on which to lean. What he's trying to say is that for them to reduce rates because it'll fucking send inflation through the roof even more so. There will be no ability to print more money because that will send inflation through the fucking roof even more so. Their tools are too few and too far between. Their only option is to devalue the dollar more so in an attempt to reduce and to increase their ability and reduce the pain on paying back some of the United States debt. In the end, they will probably end up crashing the fucking dollar, and we'll end up with the central bank digital coin backed by some sort of precious metals, most likely. Again, I'm not a financial advisor. This is just my opinions and theories formulated on many, many, many thousands and thousands of hours of research. Price stability is still their second mandate, but the original mandate of full employment has been slightly altered by, according to Poser, full employment is not enough. Not enough, period. He reads the papers enough to sense that with supply chain and disruption bottlenecks everywhere, goods inflation won't disappear. What used to give the Fed cover now exposes it. The goods price inflation is a major problem now, and it will continue. People didn't believe us last year here on the Think Tank, where we were shouting in July and August of 2021 that inflation is out of control. Americans have lost way too much money. Credit card debt's off the chain. Housing prices are way too fucking high. Rental prices are way too high. Equities, earnings per share are extremely overvalued. The Case-Shiller price profit and earnings index, accounting for inflation, is extremely high, higher than it's ever been since the dot-com bubble and the 2008 global financial crisis. I could go on. China's real estate developers and real estate and economy is an absolute garbage. Russia credit default swaps and Ukrainian credit default swaps are through the roof because mortgage-backed securities are going to crash, both residential and commercial. Commercial in China, residential in Ukraine, Sri Lanka, Venezuela, the United States of America, and Canada. Many people are unaware that Canada has 53% of all of their citizens holding adjustable rate mortgages. These are the same balloon mortgages that fucked the entire global real estate and financial system in 2008 and 9, because so many people cannot afford the ballooning interest rate payments as the Federal Reserve and central banks continue to raise rates. It's easy. It's so easy to see that it frightens me that too many people are so ignorant, unwilling, or stupid to understand what the hell is going on.
Husland to the Beige Book called this an iPod.
Check this out here real quick. This is China showing their absolute worst quarter.
This is the first time in nearly a decade of tracking the Chinese economy that the Beige Book's headline metrics all sunk into contractionary territory. So in this survey of more than 3,300 firms, it found contractions in every sector, from property, retail, services, commodities, manufacturing, all dropping to record lows. So 72% of...
Keep in mind, all of this GDP growth for China, all of this here was especially heavy as they were still quantitative easing, and they continue to print even more.
Interviewed said companies' earnings fell because of the coronavirus.
When you shop it,
sorry, that's obnoxious. If I would have known that was there, I wouldn't have shown you this video.
Virus, and of those firms, more than 80% said that sales had fallen by 5% compared to a previous quarter, and a third said the hit was more than 10%. As expected, those results were even worse in the services sector, where almost half of the companies surveyed saw a more than 10% sales fall in the first quarter. Now, the slowdown really crushed every part of the country, but the central region, home to Hubei province, as expected, had the worst closure rates as well as the steepest fall in output. And even now, those average restart rates are much lower than the rest of the country.
I booked our hotel in Kayak. It's flexible if we need to.
Oh, shut up. I'm not showing anything from Zero Hedge anymore, that's for sure, with those shitty ads. But the Federal Reserve reverse repo, banks are losing a ton of money, all of the issues that are going on in equities markets, and don't even get me started on cryptocurrencies, because we could talk about Celsius and Voyager and cryptocurrencies that are... and stable coins, Terra Luna, etc., that have collapsed and will continue to collapse, further dragging down the economy. Okay, we've heard Janet Yellen tell us on several occasions that the greatest financial risks, the greatest risks to financial markets right now are absolutely due to the over-leveraging of hedge funds and stable coins. Stable coins instability. What's going to happen next? Biden will ultimately blame the Fed when all else fails. The Fed is doing exactly what Biden wants and what we need right now. But once the recessionary numbers come in and the Fed does nothing and stocks crash, then Powell will be able to point to Biden and say, "I told you so." Then we get the next round of a QE rescue until recession is out of the headlines. The markets are on a cocktail of sleeping pills and coffee to take them off an addiction to heroin and cocaine. And it might not be enough this time. When this does happen and they need to do the next quantitative easing rescue, it will most likely be because of a massive short squeeze in the markets, where meme stocks and precious metals and many heavily other shorted stocks go to absolute record high levels as the stock market does lose more and more value in the equities and assets that are available. That being said, Wolfie, my friend, you know, I remember 2008 and 2020 and the year 2000 market crashes very clearly. Very clearly. Would you like to chime in here, my brother? Because I'd love to hear from you.
I'd love to.
Come on.
I think it's important that we remember. I think it's important that we show that we remember. Because we remember 2008 and the aftermath. The years it took us to recover, if we managed it at all. We remember not once did we see Griffin show any remorse or concern for any one of us or the teacher's pension in 2008. We remember none of them, not one, showed any remorse for their negligence and their greed. These experts and these bosses of these banks, they couldn't take Dr. Michael Berry's money quick enough, only to then see that he was actually correct. We remember that none of them were held accountable, that none of them came out and said sorry to those who had lost their pensions. or their jobs or their families or their hope. Not one of them. We remember Occupy Wall Street and that picture of them swigging champagne and laughing together whilst they looked down on us all. We remember it was the same banks behind the market crash that ended up bailed out at our expense. We remember. We remember being told the Fed had to give the banks $3 trillion in bailouts, our money in bailouts. They told us that 2 years after, because the Fed can do something today and not declare it for 2 years. We then got told in 2019, because they got a further agreement to hold back for 10 years before declaring where they were spending our great-great-grandkids' money, your money, my money, our children's money. 10 years before they actually declared, it was $29 trillion in bailouts for these banks, these suits, these experts, the people telling us today there's no crash. We ain't got a recession. We want to change the rules. We're going to lie to the people again. We remember. We remember the bankers being questioned, all lined up in front of Congress, the lip service that we were given. We remember the bankers being questioned by Congress about the dog shit that they had told their own employees to unload on us, retail, us, pension funds. We remember. We remember the email that was sent internally that was questioned by Congress of these banks and what they were saying. And we remember them squirming and sitting there and not telling the truth and not coming out and apologising or changing. We remember the rating agency bosses also pulled in and sat in front of our congressional hearings, our Congress, the people that are meant to be representing us. Both sides, all sides. We remember, one after another, when questioned about the AAA ratings, their response, their sole response was, it was just their opinion. That's what the rating agencies said, and we remember. We remember the closure of Lehman's banks, only to find out that the CEO had received over $650 million just left and went on to work elsewhere in the same industry. Yeah, nothing changed. We remember seeing all the pictures of foreclosures across America. We know that was families. We know that was people. We know that was us. They weren't losing their mansions, their art, their plane. That was us. We did nothing wrong. We remember. We remembered the austerity that we had to endure, the cutbacks to services for those who needed it most, the most vulnerable in our society, the lonely old age pensioner who'd worked their entire lives that needed somebody to pick them up, to take them for an hospital visit, take them to the social centre where they could mix with people. We remember. We remember that austerity, and we remember the sacrifice that we had to make. We never asked. We weren't asked. We were lied to. It was just taken. Our inflation, our prices, our housing market crash. The market crashes is what it does. But your pensions, unless you're unlucky, other people have benefited with their pensions. No, we didn't. No, we didn't. So we remember that there were pay freezes for millions and millions of people. We remember. The people who deserved them most didn't get them. But the banks got richer, the hedge funds made more money, the super rich got richer, and we all got poorer. Yeah, we remember.
Preach.
We remember Paulson, an expert, leaving one side to go and work on the government, not paying nearly 50 million in tax because we needed him, the world needed him, the US needed that man in that position. We remember Bernanke. Oh, God. The same playbook they're using today. There's not going to be a recession. There's not going to be a market crash. Well, people like Dalio have been calling a market crash for a while. So people like Burry. And we remember them saying there's a problem, there's an issue. We remember Ron Paul back in the 70s, 80s, 90s saying there's a problem with the Fed. There's a problem with printing money. Yeah, we remember. We remembered when they wheeled Buffett out years after the crash of 2008 as a PR exercise for Wall Street. And what he said, people that shouldn't have had a mortgage shouldn't have got it. People that didn't have a good enough job shouldn't have had it. We never made up the ninja loans. We never allowed 5 strippers to own the houses and a condo. We remember them saying, buy Enron. We remember them saying, buy this IPO and that IPO, only to watch it tank. We never see banks going bankrupt, but we did see us becoming bag holders. We remember them telling everyone over and over again last year, sell AMC, sell GME, sell this one, sell that one. What about AMC when they were saying sell in February, March, April, May? Well, if you listened, you would have missed out on that. If you listened to the experts, the Stoops, if you listened to all these brilliant people on mainstream media, you wouldn't have bought AMC. Well, you didn't get a chance to make a few quid, maybe cover a few bills, put a few quid in the bank for rainy days. Because you listened to mainstream media. Kramers and Gasparinos. Come on now. We remember Citadel's growth through payment for order flow and Robinhood. We remember who came up with payment for order flow. Go and have a look. Go and have a look at Bernie Madoff's. He ain't the only one. Citadel didn't want payment for order flow until they got into position, and look how they've grown. We remember them taking the buy button away last year. We remember Vlad coming out and saying, well, he was a boy in Bulgaria. We remember them hearings and nothing's changed. We remember the SEC coming out now. Gary Gensler, you've been saying for a year payment for order flow. Why ain't it stopped? Why ain't it changed? Why ain't you paused it? Why ain't you using the rules you've actually got today? We remembered that it was the same Citadel that was publicly against payment for order flow. Now look at it. 2014 he said that. We remember Robinhood being pushed before its IPO. Thankfully, a lot of us that were paying attention and not listening to mainstream media steered well clear of that. But we remember the experts in suits saying it was a buy, and then we watched that tank as well. We remember the so-called expert, Jim Chanos, a very well-known short in the industry, dismissing naked shorting, saying it was just CEOs who don't want the criticism. We remember it all. We have not left, and we are not leaving. We remember nothing has changed. We remember the cost that cost us. We remember it's caused by them. We remember our sacrifice was in vain. We remember, so we were prepared. We remember it all, and we ain't leaving.
Damn straight, Wolfie.
I'm not fucking leaving.
Oh.
Are you fatigued? Tell me in the chat. Are you guys fucking fatigued? Tell me in the live chat. Tell me in the think tank. Tell me on Rumble and YouTube. Are you fucking fatigued? Are you leaving?
Fuck no.
I ain't tired.
Get the money printer out.
Jerome Powell, get the goddamn money printer out. Absolutely fucking right. I am absolutely sick and tired of pretending like AMC and GameStop and meme stocks and precious metals are not the best hedge in this shitty fucking market. Because I truly, in my non-financial advisor opinion, believe that they are. 100%. That, my friends, is the retail vote. That's why retail owns 90% of all AMC shares, excluding ETFs. 85% including ETFs. That's why GameStop float is nearly a quarter locked up in computer share and DRS. Because retail owns the float. I'm not personally a big fan of DRS. I personally don't think it's a good idea. But again, I'm not a financial advisor. You can do whatever the fuck you want with your money. That being said, I would like to thank Wolfie and everybody here in the think tank. All of you that joined us today on YouTube and Twitter, Rumble. Thank you to all you 20,000 plus beautiful souls and subscribers. Although almost 5,000 of you here with us today in the think tank. Everybody on Twitter, 25,000 more wonderful red-pilled individuals on there as well. Ladies and gentlemen, if you enjoyed the content in this video, please drop a like. Please consider subscribing and share it on social media so we can get the information out there to as many people as possible. Because again, we're not financial advisors. None of this is legal or financial advice of any kind, but people need to start doing their own fucking due diligence. And we're just here to present you with some information for you to take, go look into yourself, and you can figure out what's best for you. On that note,
So goddamn rich.
So motherfucking filthy rich. It's gonna be disgusting. Most people are not gonna know what the fuck to do with their money. You're gonna need a financial advisor. You're gonna need a financial advisor, a tax planner, a financial attorney. You better start getting your fucking ducks in a row. That's what I think. If you're properly hedged. If you're not, and you got your 401k and IRA and all your other, TSP accounts being managed by BlackRock, well, best of fucking luck to you, because they're down 1.7 trillion so far this year. See you later, everybody. We're gonna be so goddamn fucking rich, and I'm gonna get rich or die buying. Plain and
Let's
fucking
fucking go.
Let's fucking go. Have a great day, everybody. Thank you, everybody, for joining us. We appreciate you. And we will be interviewing Diane Garrett. We will be interviewing Diane Garrett, Dr. Diane Garrett, CEO of Highcroft Mining Company, next week before AMC earnings. See you then. Fucking rich. I want my fucking money. Pay me my fucking money, Ken Griffin. Pay me my fucking money. Griffin, I want my fucking money. We're not fatigued. Yo, motherfucker. We're so goddamn fucking rich. Holy shit, we're gonna be so fucking rich. And that, ladies and gentlemen, is why Jerome Powell's going to get that motherfucking money printer out. He's going to have no choice but to bail out all these banks, the OCC, the DTC, the prime brokers, the banker dealers, you name it. Jerome Powell's going to print and fucking bail out central banks and central governments worldwide. Devalue the dollar, cause further hyperinflation, have a future plan set up. Excellent. Thank you very much, Wolfie, Cash, everybody. You guys are the best. Thank you.
Hey, thank you guys.
Boss, the community, Cash, Sunbatch, Martin, Queen Bee, everyone. We're all the glue. We need everybody. Every single one of us. We got this.
We've already won.
Yep.
I call it unrealized gains. They want to tax us on our unrealized losses? It's all right. I'll wait to receive my unrealized gains. Can't write off unrealized losses.
Wolfie, I'm glad your mic was on this time.
Yeah.